Hey guys, what's going on? This is DiMarco from Conquering Crypto. Tried making videos yesterday and they ended up being way too long, but today's video is going to be about profit taking, when you should be taking your profits, when it makes sense, that kind of thing. You've put $500 out, it's now $750. Do you take off the $250 that you made? Do you reinvest? Do you put it into savings? Well, we're going to go over your options today. Like I said yesterday, I think I made it a little bit too long and complex. So hopefully today I can get out all the information that we want in a more condensed way. So we're going to begin. So the first thing I get asked is, I get asked all the time, DiMarco, what should I be investing in? What do I invest in? Where do I put my money? Okay. Well, when it deals with crypto specifically, there is a website. And if you even just have one tiny thing invested, let me log in. Oh, great. Something happened with my browser. Look at this, blinding me, Jesus. Something happened with my browser and I have to reset everything because it doesn't even have me logged in on here. But anyway, that doesn't matter. So, the point I'm trying to tell you is there is a site. There is a site that you need to know about. It is called CoinMarketCap. So CoinMarketCap has pretty much every coin in existence. I'm pretty sure there's over 10,000 at this point, but it gives you a list of all the coins that are out there, and it numbers them, and the number is based on, I'm sure, more than a few things like volume, market cap, and I'm sure there's maybe popularity, name, number, blah blah blah, all that stuff. But so for most people out there, especially if you are new, if you just started investing in the last 6 months, should be focused on investing in the top 20 to top 50. So you have things like Bitcoin, Ethereum, BNB, Solana. Solana's a big one. Solana's one of my favorites. ADA is still cool. Luna, Dot, Dogecoin, SHIB, Matic is up there. So my point is you need to use this website to your advantage because it's a big deal. This site will give you everything you want to know about the coin you're interested in. I'm wearing a whole bunch of metrics stuff today. We can easily look up metrics. Boom, there it is, and we go to metrics, and here we are. So you see what I'm saying? The site gives you info on your coin, and while some people might not know all the info, the best thing to do is to come to this top page, this front page, and they list it by market cap and other things. But for most people, I recommend Bitcoin and Ethereum because they're going, like, it's almost a guarantee that at some point they're going to rise. I think we're going to see Ethereum over 10 grand probably in the coming years, and I think we're going to see Bitcoin over 100,000 in the next couple of years. I'm pretty sure we're going to see it. So those are the kind of things that you want to be investing in. So CoinMarketCap, that's lesson 1 today. CoinMarketCap is where you should be going to try and find all of the best coin. And again, if you are new, we're going to learn about being a safe trader or a risky trader. Well, if you're watching this video, more than likely you should try being more of a safe trader. And if you're trying to be more of a safe crypto trader, you should be focused in at maximum just the top 100. These are mostly vetted projects. These are projects with clearly market cap and power behind them. These are projects that are more than likely so 98.49. I thought we were over 10,000. We still might be, but that says 98.49. I think we're over 10,000 at this point. Anyway, doesn't matter. The point is, use CoinMarketCap to your advantage, and I would say you can pretty much put any money into any of these projects and you could consider that to be safer versus investing in like a meme coin or a shit coin. Now, we do have some meme coins on here. Dogecoin is on here, SHIB is on here, but they are meme and shit coins that have upgraded into better coins, into vetted coins. So you're going to find more of the actual garbage coins. Let's see if we can go to a later page. We'll go to page 99. Zappy, Chinu. Now some of these I've never heard. Baby Little Floki, Free Moon. Some of these might become something one day, but my point is you want to stay out of this stuff for if you're a safe investor. Now we're going to get on where you can also invest in this kind of stuff just by splitting up the kind of money that the profits you take, where you put them. Maybe you want to put them into shit coins. You kind of get to decide on what kind of trader you are and how you want to treat your money. Now, the focus on this is mostly going to be on crypto, but of course you can use a lot of these methods that I'm going to show you on stocks, Forex, and among other things. So let's go over, now that we got that out of the way, so we're going to go over. Okay, so this next part is going to be finding out what type of trader you want to be. So you have your coin market cap, right? Great. You know where their coin are. You belong to Conquering Crypto. So you've got help in multiple places where you can decide where are smart places to put your money. And again, I'm gonna say this again, you should more than likely be putting your money into the top 50 or top 100 on CoinMarketCap. You have a higher chance of getting return, and your returns have a possibility of being bigger if you put it on the right things. Just because it's in the top 100 doesn't mean that you can't find some kind of meme coin that's in there that maybe does 100 times in a couple months. That kind of stuff still exists in the top 100, but the top 100 is just, you have a more than likely chance. That's why I recommend going over CoinMarketCap. It is the best thing for you as a crypto trader. The best. Like, you need to have it. If you invest in crypto at all, you need to use CoinMarketCap as a helpful tool. Trust me. Okay, so we're going to talk about what type of trader you want to be, because honestly, most people don't really think about that. They kind of just make it so that it's like, well, I want to make some money, I want to invest here or there. Well, what I recommend is you decide what type of trader you want to be or how you want to treat your money. So it necessarily comes in two camps, and that's being a safe trader or risky trader, but you can mix and match this kind of stuff however you want, based on your skill set, based on what you know, based on what you think might happen, based on information you received. You have to make these decisions. This is just like a handy guide on deciding or helping you decide on what kind of trader or what kind of things to do, what kind of investments to make with your money that makes sense to you. So for me, most people that's even watching this video, you guys should be safe long-term traders, okay? You are going to get a lower yield in the end, and that's just the reality, but you have a higher percentage of winning the trades that you're going into. If you buy a blue chip stock in a year or so, that should almost absolutely make money in some way. The majority of blue chip stocks, by the way, are top tier stocks that you can put your money into, and they're considered very safe investments. That is where your money should be going. Being a safe trader is for everybody. You can be an expert and still have a safe trading, section. You can also split up your money. So let's say you have, let's use this for an example. Let's say you have $10,000 in a new account, okay? Brand new account, 10 grand, okay? Let's invest 10 grand. Well, you can put, if you wanted, you can put, oh boy, she's going crazy. You can put 8,000 into safe stuff, and then you can put the other 2,000 into riskier stuff. You get to decide what kind of risk you're willing to put out. Now, on the risky side, I don't recommend it for most people, but you can dip into being a little bit risky. I recommend at least putting more than 75% of your money, your investments, into safer trading type things, but that doesn't mean you have to put it all there. You have to decide your level of risk. It's all up to you as the individual trader, but I recommend coming up with some sort of plan that gives you an outline on how you want to treat certain situations. Or do you want dividend stocks? Do you want ETFs? Do you want to stake your crypto? There are so many factors, and I say do things as safe as possible because you're more than likely to get a return. Hot tip. Okay. So, what is the more advanced stuff? Well, the more advanced stuff is you have a higher chance of making more. You have a higher yield potential, but then of course you also have a higher loss potential. So again, your the percentage that you could make is higher, and the percentage for you to lose the trade or lose money is of course higher. That's a big thing, because if you're a riskier trader, you should be able to know going into a trade whether it's going to be what percentage of a win or loss chance you kind of have. Whereas a safe trading should be more of, I trust the stock, I trust the crypto. I'm putting this in BTC, I'm putting this into Ethereum because I know the growth is going to happen. And growth is important to safe and new traders. So if you are risky trading, if you don't have a plan, you're basically gambling. Okay, this is I love to gamble, but I do not love to gamble when it comes to my investments. No, and the difference is having a plan, understanding where you're putting your money in. If you do things the right way, you actually have an edge in the crypto market or the stock market or even in Forex, just based on the kind of information you have. So I highly recommend, even if you can only look at your stocks one day out of the month, educate yourself 5-10 minutes a day. Just read a few articles, talk to us more on Conquering Crypto, ask questions, ask as many questions as you want. That's why I made Conquering Crypto, so we can all learn together. I know that the majority of people in Conquering Crypto I actually know personally, so I made it to help people, to help each other. Use that to your advantage. It's making money we're talking about here. This is very important. But again, let me not go off too much on a tangent. But if you do not have a plan, you're basically gambling. And I'm not about that. I love to gamble, but not when it comes to investing in crypto, in stocks. No, you should absolutely be forming a plan that leads you into a way for you to make money on your investments. There's also this thing called dollar cost averaging. I talked with a buddy of mine the other day. He used dollar cost averaging. He was down big time a couple months ago. And because the crypto he was getting into kept going low and lower, but he kept buying, and it took his cost and it made it lower. It took it from an $8 average to a $7.50 average, then to a $7 average. And guess what happened? In the past week or so, it's gone back up to the point where not only did he get most of his loss back, but he actually started to go in the green and make money. This is why we do this kind of thing. But dollar cost averaging, I am going to consider to be more of a riskier thing. If you do not know what you're doing, you should not be doing dollar cost averaging. It's more of a risky strategy, but it is a strategy nonetheless that you can be using. This person used it perfectly, he did a great job, and boom, he's reaping the rewards now. And of course, if Bitcoin keeps going higher, he's going to turn that what was once a loss into a big win. And remember, you haven't lost or won any money until you sell. So if you have something that's in the negative, let it sit in the negative. If you don't need the money, don't touch it. Unless it's an emergency, leave it alone, because the possibility of it flipping to green could happen down the road. I mean, this is proof. This is why dollar cost averaging is a great thing. Okay, so now that we went over you picking what kind of trader you want to be, how you want to split up your money, you can also split up your money like I showed here in a safe and risky way. Maybe you want to be both types of traders. We'll take your money, write down what you have, write down what you plan on investing, and then also write down what you want out of those investments. Why are you putting your money in something if you don't know what you plan on getting back? That's not good investing. You should absolutely, if you're putting in, especially over $500 to $1,000, have some kind of plan. So now I want to go over some of the best ways to take profit, because honestly, it can get a little complicated. I think a lot of people just expect to be like, well, I've made money, but when do you take it? When do you have to tell yourself, oh, okay, well, I've made money on my investment, but when are you supposed to take it? And I think a majority of people actually don't know. So let's go over that. The biggest one is called the 25% rule. So the 25% rule is kind of like an attempt at one size fits all to when you should be taking profits. So let's say you have let's say you've made an $1,000 investment. Okay. Now that $1,000 has made 250. Okay, so let's say plus 250. Okay, so now you started with 1,000. Now you have 1,200. Okay, so let's get that up there. And let's make it look. Okay, so we're gonna call this initial investment. I don't even know if I'm spelling all this stuff right, but just gonna show you guys this as an example. Initial investment 1,000. Profit 250. And then you end up with, now you have a 1,250. Okay, so you started with 1,000, you put it on stock X, and it's now 1,250. Well, 25% is a nice area to take profits. Okay, in this case, it would be 250. So now, what do you do with your 250? So now we've already developed a 25% rule. If you're investing 25% to 50%, remember that you can adjust this however you want to fit your trading plan. But this is like the generic big kind of one size fits all. 25% is when you should be slicing your profits off. Okay, it's actually called the 25% rule, but 25% is when you slice your profits off. Okay, so we had our $1,000 investment. It's made 250. So we're gonna slice off that 250. Okay, we're gonna take it. Let's move all this down. Now, of course, you can punch in your own numbers and set it up for however you want to, but this is going to be the more important part. What exactly, how should you treat that? Should you reinvest it? Well, let's go back to being a safe or risky investor. Okay, let's go back to it. Now, again, I say you should be a safe investor. So what is the big part of being a safe investor is you should have a plan. Okay, you should be able to plan the majority of your big trades. 80% of the money you're putting in should be somehow in some way written down, and you can calculate fees, you can calculate taxes, you can calculate profit, and you absolutely should be, because all of that's a factor that hurts your bottom line. So write all of this stuff down. I highly recommend keeping track of all of your stuff, even in an Excel sheet, in a notepad, doesn't matter. Just keep track of it. I have notebook after notebook I'm looking at right now, and I keep track of everything I do, but that's because, I do it a lot. Okay, so again, take profits out around 25%. If you've reached 25%, you put in $100, you've made 25. You can at least tell yourself, I've made 25%. Maybe I should take that out. Now, here's where things get interesting. You have to decide what type of trader you are. What do you do with that 25? What do you do with that 250 that you made on the 1,000? Well, here we go. Again, let's say that you are going to be a safe trader, where can you put that? Well, the best places to put that profit is safe places. Savings account, ETFs, blue chip stocks, Bitcoin, Ethereum. You should take those profits and put them in spots where they're going to be safe and where they're going to grow. That's being a safe trader. And then you can decide what you want to do with the remaining 1,000, or like in the other example, the remaining 100. So again, we're using 1,000 and 100 just because it makes the 25% easier understanding it. But taking the 250 and saying you want to be safe means putting it into safe investments. So that's what I recommend for most people. Most people ask me, what should they do in their profits? When should they take them? The 25% rule is how you should identify when you should take profit. Okay, if you see 25%, it can be 20, it can be 40. The 25% rule, again, is just all-encompassing, but you get to decide what kind of trader you want to be. The higher the percentage means the longer you plan on holding it. And I recommend that more often. Long-term trading is what most traders should be doing. Long-term and swing trading, which means that you're investing over months or years. So you give your low yield, low risk stocks and cryptos time to advance so that you can take off the profits and put them elsewhere. That's what I recommend. So safe places: ETFs, mutual funds, savings accounts, real estate. Take those profits and put them somewhere safe, and then you can kind of decide what you want to do with the principal initial investment. You can take that 1,000 and leave it. You can move it. You get to decide what you want to do from there. But when you make the money, when you have the profits available, I do recommend taking them. If you feel like it's something like Tesla and it's going to grow in a year and you don't want to take the 25%, you don't have to. This is a broad example, okay? Now let's go over what it would be like to do things a little bit riskier. Well, first of all, the riskier, more advanced trader is going to take profits sooner. Okay, because where he's going to be putting their profit taking is into different profit types, or different profit potentials. In other words, more risky investments. So let's use this example again. Okay, I'm a risky trader, and I have my $1,000. Okay, my $1,000 investment. Let's say I put it on crypto X. Now, my initial investment was 1,000. Now let's say I want to take it out at 10%. Okay, so I've made 100. Okay, so I've got a total of 1,100. Okay, so now I have a total of 1,100, and I'm a more riskier trader. What I would do is take that 100 and then hold it so that it can go back into another price point. I'm going to show you that in a second, or basically put it into other riskier trades. Now, I'm going to show you what I mean by putting it into a better price point. This is the risky way of doing things. But again, if you have certain monies that you want to risk for a higher reward, you get to decide that. Okay, so I'm gonna just draw up something simple. That's fine. So, as the risky investor, let's say I started off with my $1,000 right here. Okay, so let's say this was my $1,000. Let's say I bought it here. I don't know. Here's fine. Okay. Boom. That's where I put my 1,000. Now, let's say when it gets up to here, I've made the 100. Okay, so I slice off that 100 at this point. We'll make it a different color. I slice off. Let's go for you. I slice off the 100 that I made. Okay, so this was the initial investment here. I waited. Boom, made a little bit of money, but I'm doing a riskier trade. So I made $100 on my 1,000. I take the 1,000 out. Now, what I do is I wait for the price of that same stock or a different stock, whatever, or crypto, to get to a better price point, and I take that 100 and I throw that 100 in when price goes lower. You got me? So in other words, now that I've made 100 here, okay, let's extend time a little bit. That's not how we extend time. This is how we extend time. And we'll make ourselves another little path, okay? Okay, so now what I can do is tell myself, okay, well, I've made it $100 here. I'm going to take it out. So I take out the 100. And what I do is I then apply that same $100 at a lower price point. So that now my 1,100, or whatever it would be, because honestly, it's going to take price from 1,000 maybe to 950, and then you throw your 100 on there. So let's say now you've got 1050, but you have that 1050 at a better average This is a riskier style, but this is what I recommend for those who want to do things like dollar cost averaging, or for those that can pay more attention to the market, where you should put your profits. This is what I do all the time. I scalp, but this is a scalping technique, but I scalp profits at 10-15%. I wait for, and then I just leave it there, whatever the initial investment was. I wait for price to drop down, and I throw those same profits in at a lower point. And that's what I recommend for those who want to be riskier. It's a great way to do it. So there we go. What have we learned in these videos? Because I think I've covered everything. You should also learn about dollar cost averaging. So if you bought into a stock, okay, at its height, this is what my friend did. He bought in at a certain point, okay? What he then continued to do, because price fell, is he started to buy when price got lower. And what it does is it takes your initial higher up investment and it takes the average and it brings the average down. So the benefits of that are that you profit sooner, and now you have, I don't know, you kind of just have a beefier profit at a lower spot in what you want. So you profit sooner, and it's not safer, but it's definitely a way that you can use riskier trading to then benefit, because again, what he did is when he bought, price went down. Well, when you buy lower, piece by piece, it takes that initial investment and it averages it lower. So now you have a better control over when the stock or crypto goes higher to profit sooner. But I don't recommend this for most. I recommend it only if it's like a good blue chip or something like that, because for a lot of people, unless you can look at your holdings a lot during the week, you shouldn't be doing that. But it is absolutely a method that works, and my buddy is proof of that, and I'm so glad he told me this whole story that went in with it, because we went in with together. I dropped out soon, he stayed with it, but what he kept doing is something that Conquering Crypto teaches: dollar cost averaging. And guess what? He was able to profit recently, and if he holds on to it, I'm sure it's going to profit even more. Good for him. Actually was really proud to hear that. So again, what did we learn? We learned CoinMarketCap. CoinMarketCap is the biggest thing that you have when it comes to looking at coin. If you are a new safe investor, you should be looking into the top 10, 20, 30, 40, 50. I say don't go beyond the top 100 if you're playing safe. If you don't want to play safe, you want to use some money to be riskier, you can jump into page 500, or if you heard about shitcoin X is going to explode 100 times, right? They rarely do. Then you can use some of your funds for that, but you have to decide what type of investor you are. So we learned about CoinMarketCap. We learned about deciding on being what type of trader are you. We're like, do you want to mostly do things safe? And again, the majority of you should be doing 80% of your funds and investments into safe, low yield, low growth stocks or crypto, because they're the ones that are actually going to make you money. The majority of people that go into the market lose their money immediately if they don't have a plan. You gotta have a plan. Highly recommend having a plan going into, because it's your money, it's your hard-earned money. And nowadays, with how expensive things are and how crazy things are getting, you just want to make money. So the riskier stuff, if you want to jump in and do that kind of stuff, great. That's not typically what I teach, though. I teach that the low and slow, like cooking ribs, is the way to go for most people. You can also decide to be a risky trader, but if you're going to do riskier stuff, I just recommend that you learn more about the riskier tradings, what the risks are, because honestly, that's what you're doing this whole time, is you are learning, or you are doing risk management. This is all about risk management. How far is that $1,000? How much do you want to risk? And you're setting up risk management for all of your trades. And then pretty much the last stuff we learned is, after you decide what kind of trader you want to be, what do you do with your profits? I have my $1,000. I've made 100. Do I want to wait until it's 250 for the 25% rule to take that out and then put it into a safe, something safe, savings account, checking account, mutual fund, ETFs, real estate, something safe? And I highly recommend that for most people. That's the best way to do it, is to slice off that profit, put it into something else safe. I really recommend that. If you want to be on the riskier side, you can wait for earlier profits, hold them, and wait for the time to strike. Because when it comes to the market, if you're going to be a risky trader, you have to have patience and you have to learn about timing. That's why I set alarms on everything. Timing, timing, timing. You want to get back in at the right times so that you can profit even more. And I think that's pretty much it, guys. That 25% rule is really like a generic attempt at one size fits all. You can look it up yourself. It's one of the things that I learned about a couple years ago, and it works. It's just a simple method. If you have 1,000, you've made 250, that's a 25% increase. Take the 25% off the top. It's called slicing. And these are scalping techniques. Well, the riskier trading, 10-15%. So sooner profit is the scalping techniques, but if you're willing to wait and let your stuff grow, you can absolutely get in it at better times. You can do that same type of thing as a safe trader. You can, if you have $1,000 in something, you've made 250. You can take off that 250 and wait for price to get back down, in 3 months, and then reapply that 250. But put that 250 while you're waiting into something else. A high yield savings account is kind of a waste, but you can put it into maybe a dividend or an ETF, something that is going to make you money. Constantly try to use your money to make more money. That's what the rich and wealthy do. They use their money to make more money. Now, if you don't have a lot of money, I recommend doing paper trading and getting a paper account, which is fake money, and testing out to see if trading is right for you. Because this way you can put 1,000 fake dollars on Tesla and see how it works. The more you learn, the more you practice with the stuff, the better you're going to get, the more money you're going to make. That's the bottom line. So that's it for me, guys. I hope you guys learned a little bit. We went over some really cool stuff. Don't forget CoinMarketCap, and I'm going to be setting these up and uploading them, and I hope this was useful for most people. Don't forget the 25% rule, and take care. Well, let's have a good week, and hopefully this crypto bull market continues. But that's it from me, guys. Peace out. Hope you learned a little bit of something.